Thanks for joining us once again on the Tech Corner. I'm George Tsilis, Senior Markets Contributor with the Schwab Network. Today, we're going to be revisiting NVIDIA Incorporated. Now, NVIDIA is a leading infrastructure computing technology company known primarily for its innovations in accelerated computing. The company operates through two main segments, its compute networking division as well as its graphics processing division. The compute and network segment includes data center accelerated computing platforms, AI solutions, networking, and automotive platforms. It also covers robotics and cloud computing. The graphics segment offers GeForce GPUs for gaming and PCs. Also, its RTX GPUs used for enterprise graphics and computing. Now, NVIDIA's GPUs have always been celebrated for their parallel processing capabilities, which are essential for deep learning algorithms and AI solutions. The company provides robust data center solutions that integrate high-performance GPUs, CPUs, and networking infrastructure to accelerate AI and high-performance computing workloads. Now, the core secular growth story for NVIDIA is its data center solutions, but the company also supports a wide range of industries, including healthcare, automotive, and manufacturing, with solutions tailored to specific applications. Now, let's take a look at some of the competitors once again for NVIDIA. From a domestic standpoint, we have to consider competitors like Advanced Micro Devices, Intel Incorporated, which is a major player in the semiconductor manufacturing space, and Broadcom, also known for its application-specific integrated circuit semiconductors. Other major competitors now include Google with its TPUs or tensor processing units, which are AI-specific accelerator chips. Now, when it comes to unique value for NVIDIA, it lies in its comprehensive platform strategy, a strategy that integrates hardware, software, as well as AI solutions. The company's proprietary programming model and domain-specific software libraries enable superior performance in AI model training and inference. And lastly, the company's extensive experience in investment and research and development further solidify its position as a pioneer in the industry, delivering advanced solutions across various sectors. Now let's take a look at some more recent news for NVIDIA. On February 25th of last month, the company reported its Q4 2025 financials, whereby both top and bottom line numbers beat estimates. The company said it earned approximately $1.62 per share. This is up a whopping 82% year over year and 25% sequentially quarter over quarter. Revenue also soared higher by 73% year over year, which came in around $68.1 billion versus $39.3 billion for Q3 of 2025 last year. Now, NVIDIA forecasted revenue of $78 billion for the next quarter, which is significantly higher than the previous estimates, which were slightly higher than $68 billion. This implies rapid continued growth. The data center segment grew 75% year over year, with vigorous demand from the US and European clients, offsetting losses from China revenue due to some export restrictions from the United States. Management stated that Blackwell demand remains, quote, off the charts and is currently supply constrained. The company also updated its visibility into a $500 billion pipeline for Blackwell and the upcoming Rubin platform through calendar year 2026. Now, despite the positive news in the company's most recent earnings and sales, let's also address some of the other positive attributes for the company. Now, NVIDIA's Q4 earnings highlighted effective data center growth, driven by significant demand for its Blackwell GPUs and a robust order book entering into 2026. This still positions NVIDIA as a lead architect in the AI market. NVIDIA's dominance in AI and data center GPU markets means demand from big tech, which continues to invest heavily in AI, bolstered by strong spending, suggesting long-term demand for its Blackwell GPUs. NVIDIA's financial performance is also underpinned by a strong balance sheet and significant free cash flow, enabling ongoing investments in R&D as well as strategic expansions. The company also continues to maintain a high profitability level compared to its own historical 5-year average as well as its sector peers. For example, if you look at the gross margins on a trailing 12-month basis at 71.07%, this is significantly higher than the sector median of about 49%, but also about 500 basis points higher than the 5-year average, which is roughly 66%. Net income margin is also remarkable at 55.6% of sales. This is significantly higher than the 5-year average of around 38%, and also widely higher than the sector median, which is around 5.5%. Now, despite the over $4.5 trillion market capitalization, NVIDIA's valuation may still be considered cheap when you actually look at the stock's PE ratio relative to growth. For example, the forward PE ratio of around 22 times relative to EBITDA growth, which is roughly 56%, suggests that on a PEG ratio basis of less than 0.5, the stock is still cheap. Now, despite many of those positives, we also always have to address some concerns on this segment. First off, the concerns about a potential AI spending bubble have been raised, which could impact NVIDIA if market demand for AI infrastructure declines. Nvidia also faces risk from its revenue concentration, with two major hyperscale customers accounting for 36% of revenues, and the potential for capex pullbacks from hyperscalers that could eventually impact its top line. The company's exposure to geopolitical tensions, especially regarding sales to China, remain a concern, affecting its ability to fully capitalize on the AI market overseas. Also, competition from domestic rivals, as mentioned, AMD, Google, and Broadcom, could eventually erode market share dominance. Nvidia's stock price performance remains vulnerable to further multiple compression, despite delivering strong earnings as market sentiment in the tech sector remains cautious. And lastly, Nvidia's growth may eventually normalize, with concerns about sustainability of its high growth rates and margin pressure from the production of new Blackwell chips as well as the next generation Rubin platform. Now let's take a look at the technical picture for Nvidia. First off, the current technical condition for Nvidia is positive, yet balanced, with performance up 8.5% over the past 6 months, fractionally beating the S&P 500's 5.5% return for the same period. Over the last 30 trading days, when compared to the S&P 500, the stock has also outperformed the broader market. Nvidia's 52-week price performance has shown a remarkable gain of 55%, despite the stock's relatively range-bound performance since Q4 of last year, and this 55% gain has been mostly due to the strong performance in the first half of last year, 2025. The stock is also trading below its 20 and 50-day moving averages, which suggests near-term weakness in price action, and the bulls are patiently waiting for a price reclaim and a positive alignment of these moving averages before pushing the price significantly higher. The stock is still above its 200-day moving average, which is pointed up, indicating that the intermediate-term trend is still bullish. With that in mind, alongside near-term market weakness as well as the stock price weakness, the next technical level of support is approximately $170. This is a level published in early February this year as well as December of last year. Now, lastly, in case that technical support level I mentioned of 170 is broken, there is a secondary level of rising support approximately at the $160 level. This also approximates a rising 50-week moving average. Now, in summary, Nvidia has solidified its dominance by supplying critical hardware to a diverse AI ecosystem, ranging from hyperscale technology companies, automotive giants, and cloud service providers that power the modern internet. By aggressively reinvesting a massive portion of its revenues in R&D, the company has successfully transitioned from a gaming-focused hardware maker. By aggressively reinvesting a massive portion of its revenues into R&D, the company has successfully transitioned from a gaming-focused hardware maker to the primary architect of the global AI and accelerated computing revolution that we're going through. With deep-seated partnerships and a mode of proprietary software and networking solutions, this makes NVIDIA's data center infrastructure the indispensable standard for any enterprise scaling high-performance workloads for the next decade. All right, that's it for this week's edition of the Tech Corner. Please don't forget to like and subscribe, as always, to the Schwab Network. I'm George Tsilis. We'll see you next week.